But studying these pullbacks, I noticed something really interesting. So I'm going to show you something. This line right here, this purple line, is the anchored VWAP. And I'm always going to, in this presentation, anchor it to the VWAP of the most recent pullback and then see where the next pullback comes. And the reason I think this is important is because we know that there's large institutions and hedge funds that use these VWAPs to fill orders. They set algorithms and say, okay, if we pull into these zones, we're going to set an algorithm to kind of buy around these zones if we have to buy. That's what I'll get to in a second here. But let's just start with the April low, and then we bounce from here. So we put a VWAP right there, and look at where we've come to right there. Okay, so let's put a VWAP on that candle. Well, you can see we pull back. The next little pullback we have, it's only a 1-2 day pullback, hits that and then bounces. Well, that's interesting. Okay, let's put a VWAP right there. Well, the next pullback, we have a 3-4 day pullback into this VWAP, and then we bounce. And then we pull back again into this VWAP, and then we bounce. Well, that's interesting. Okay, let's anchor a VWAP right there. Well, we have a pretty big bounce, and when we come back, that's where we find support, and then we rally to new highs. Well, let's put a VWAP right there. Well, you look at that. We rally, we come back in, we find support right there, and then we bounce. Well, that's interesting. Let's put a VWAP right there. We bounce twice, and then off to the races. Okay, well, let's put a VWAP right there. And we are in yesterday's candle. So every single time we rally and then come back, where we find support is the anchored VWAP before it. And we know that often hedge funds and large institutions can fill orders around these VWAPs. So what does this mean?